Good morning, it's Monday the 9th of January, and yes, it's 2023, we made it. A very happy new year to you all, and welcome to the first roundup of the year of this coming week's economic highlights. Lots of economics and not a single royal revelation, I'm sure you'll be relieved to hear. So as always, let's start with a quick rundown of the key economic numbers being issued this week around the world's markets, and we'll then dive into some of the more significant highlights afterwards with our own thoughts and analysis. So let's get straight to it. So the economic numbers being issued this week start today with the release of the investor confidence numbers in the Eurozone. There's no figures released on Tuesday, but on Wednesday the CPIs for both China and Australia will be released. And on Thursday the minutes of the last meeting of the ECB are released, and we'll be giving our thoughts on these afterwards. We'll also discuss the release of the latest CPIs in the US, also due out today. And on Friday, we'll hear the latest China trade updates, GDP in the UK and the Michigan confidence numbers in the US. And the companies that we'll hear trading updates from this week start today with Tilray. On Tuesday, we'll hear from Bed Bath & Beyond and Game Workshop. And Sainsbury's is the first of the big supermarkets to release results this week, with their Q3s being reported on Wednesday. And on Thursday, it's Tesco and Marks & Spencer's turn, and we'll be discussing both of these and Sainsbury's afterwards in more detail. And we'll also give our thoughts afterwards on ASOS, who are due to release a 4-month trading statement today. And finally, Thursday wraps up with reports from Whitbread and TSCM. And on Friday, it's a day for the US banks, with reporting due from JP Morgan, Citigroup, Wells Fargo and Bank of America. And we'll give our thoughts on these towards the end of today's video. As well as on Delta Airlines, who are due to release Q4s also on Friday. And finally on Friday, we'll hear from United Health. Well, the main events this week are stacked firmly at the end of the week, with US inflation and US earnings season kicking off with the banks. As we all know, inflation was a key theme in 2022 and unsurprisingly is expected to remain central for traders as the new year ramps up. So let's take a look at this week's bigger stories in more detail. Well, on Wednesday, Sainsbury's is the first of the big supermarkets to report this week and is expected to post like-for-like sales growth, including fuel growth, of 6.8% in Q3. Groceries are expected to be a driving force, rising 6% as households stocked up for the festive period. General merchandise is expected to increase by 4.5%, while clothing sales growth expected to be a lacklustre 0.8%. Sainsbury's is targeting an underlying pre-tax profit of £630 to £690 million across the entire year. In October, Tesco issued a profit warning, sending the share price below 200 pence to a 6-year low, while the supermarket giant posted retail like-for-like sales growth of 3.2% in H1, but warned that the full-year operating profit was expected to be around £2.4 to £2.5 billion. Since then, the share price has rebounded and Tesco is expected to post like-for-like sales of 4.1%, thanks in part to an 8.3% jump in sales from its wholesale division, Booker, and a 4.2% increase in sales in its UK and Ireland operations. Well, Marks & Spencer are also due to release Q3s on Thursday after the share price experienced a 40% decline last year. H1 results released in November reveal that profit before tax fell 23.7% year-on-year to £205.5 million, despite revenue rising 8.5% to £5.54 billion. The Ocado joint venture posted an H1 loss of £0.7 million compared to a £28.1 million profit the previous year. However, general merchandise saw growth of 14% across the same period. The retailer also said that trading was in line with forecasts in the run-up to Christmas, and that said, costs have also been rising, up 8.4%. The results come as the company continues its major transformation, which started under Steve Rose and is being continued by Stuart Machin, who has accelerated the rate at which town centre stores will be closed down and when new out-of-town sites are opened. The online clothing retailer ASOS is set to update the market, covering the last 4 months on Thursday, including the start of the new financial year and the key holiday shopping season. ASOS saw growth slow in the previous financial year and costs rise, as well as hefty product write-offs. That trend is expected to continue in the current quarter. The outlook will be under the spotlight, particularly after they warned that forecasting shopping habits would be challenging given the deteriorating macroeconomic backdrop. ASOS has taken steps to cut freight costs and capital expenditure, but has also warned that it does expect to book a loss in H1 before recovering in the year's second half. Well, the minutes of the December European Central Bank meeting are due to be released also on Thursday. Well, at this meeting, the ECB raised interest rates by 0.5% to 2%, slowing down the pace of hikes from 75 basis points at the previous meeting. However, ECB President Christine Lagarde also warned that the central bank was looking at hiking rates by 50 basis points at the future 3 meetings, adopting a more hawkish stance than expected, and pointing to a terminal rate of over 3%. Her comments fuel fears that the ECB could over-tighten heading into an economic slowdown. The minutes could of course shed some light on how widely opinions differ within the governing council. So as a result, do keep an eye this week on the Euro and the DAX. And finally, for Thursday, the US Consumer Price Index is due for release at 8:30 hours Eastern Standard Time, and it will provide detail on the inflation picture for the month of December. Well, inflation has been falling in recent months, dropping from a high of 9% in June to 7.1% in November, cooler than the 7.3% forecast, fueling bets that the Fed could adopt a less hawkish tone. CPI is expected to fall again to 6.7% year on year. Meanwhile, core inflation is likely to fall to 5.7% year on year from 6%. Concerns are that inflation isn't falling fast enough due to rising wages after annual earnings rose 5.1% in November. That's up from 4.9%. Fed speakers, including Powell, have been clear in their message that interest rates still have further to rise. So do keep an eye on the US dollar and US indices. US Q4 earnings season kicks off on Friday with US banks. Citigroup, JP Morgan and Wells Fargo are expected to reveal just how they're holding up as the Federal Reserve continues to raise interest rates and isn't likely to start cutting them until 2024. These 3 banks are all expected to report a drop in adjusted earnings per share as net interest margins improve, but trading is expected to be a drag. Investment banking is also expected to remain a tailwind given the challenging environment. The sector as a whole could be one of the worst performing in earnings season. And finally, on Friday, Delta Airlines is due to report Q4 earnings at the end of this week amidst continued recovery in travel demand. That's despite the deteriorating macroeconomic backdrop. Delta raised its Q4 earnings forecast to $1.35 to $1.40 per share. That's up from a previously expected $1 to $1.25 per share. Total revenue expected to come in at 7 to 8% higher compared to Q4 2019. But looking ahead, the airline expects adjusted earnings to nearly double to $6 a share in 2023. The share price trades 15% higher over the past 6 months. So those are the big stories of the week. Let's wrap up with a quick look at the dividend announcements due out this week. In the FTSE 100, we'll hear from SSE, Sage Group, Ashtead Group and B&M European Value Retail. And in the FTSE 250, we'll hear from Primary Health. So there you have it. The year is ramping up with earnings season for US banks and the main supermarkets here in the UK. So we'll get an early indicator of just how the traditionally financially exuberant Christmas season has fared in the current climate. Will it set the tone for the coming year? Also, the UK government setting out its policy stall last week has given us a glimpse of at least which direction the national ship is to be steered politically for the year. But as we all know, a year is an eternity in politics. After all, we did manage to burn through 3 prime ministers in the last one. So it's going to be an interesting 12 months. All we can promise is that there'll be no transatlantic whining or my truth bombs from us here at Atlantic Capital. Just simple analysis and opinions, sparing our clients from the noise, economic or otherwise. So as always, let me remind you about our app with our award-winning 2 years in a row trading signals. But why not check it out for yourselves? It is free and it does work on all your devices. So once again, thanks so much for watching. Don't forget to click on that subscribe button to make sure that you don't miss out on our regular financial updates with our expert market analysis and opinions. So until next time, from all of us here at Atlantic Capital Markets, have yourself a great week.